BlackRock, the world's largest asset manager, controlling over $10 trillion in assets, is making a massive bet on data centers. Yes, the same company that quietly shapes global finance is now diving deep into the digital backbone of our future. So why is BlackRock investing billions into data centers? What does it mean for the AI revolution, for investors, and for you? Let's break it down. And by the end of this video, you'll understand why this move could define the next decade of global infrastructure. The move that shook Wall Street. In 2025, BlackRock made headlines when it announced a multi-billion-dollar push into data center infrastructure, partnering with top technology developers and real estate funds across the US, Europe, and Asia. Their goal? To own and operate the physical foundation of the AI economy, the warehouses of the digital age. But this isn't just another real estate play. BlackRock isn't buying office buildings or retail spaces. They're investing in the facilities that power artificial intelligence, cloud computing, and the future of the internet. According to insiders, BlackRock is particularly targeting hyperscale data centers, the kind that serve giants like Amazon Web Services, Microsoft Azure, Google Cloud, and now OpenAI and NVIDIA-backed startups. These are not just buildings. They're energy-hungry, high-security fortresses filled with servers processing trillions of data points every second. And they're the lifeblood of AI. Why data centers are the new oil. In the early 2000s, oil powered the global economy. Today, data is the new oil, and data centers are the refineries. Every time you ask ChatGPT a question, stream a video, or run an AI model, data flows through these centers. But here's the catch. AI needs exponentially more computing power. Goldman Sachs recently reported that AI workloads could increase global data center capacity demand by 160% by 2030. And with that, electricity demand from these centers could double, creating a gold rush for new facilities. So while everyone is investing in AI software or chip makers like NVIDIA, BlackRock is playing the long game, owning the infrastructure that makes it all possible. They're not betting on who wins the AI race. They're selling the shovels in the gold rush. The strategy behind the move. BlackRock's investment strategy revolves around three core principles. 1. Stable cash flow. Data centers are typically leased to tech giants under long-term contracts, generating predictable rental income. These are high-credit tenants. Think Microsoft, Amazon, Google. 2. Inflation hedge. Many of these leases are indexed to inflation, protecting returns even as prices rise. 3. Growth exposure. Demand for AI and cloud computing ensures consistent growth in new data center construction, meaning more assets under management and higher returns. And remember, BlackRock's massive infrastructure division, already worth over $100 billion, is expanding fast. They've already invested in renewable energy, telecom towers, and transportation hubs. And now, digital infrastructure is the next frontier. This isn't a short-term play. It's a 20-year bet on the digital economy. Energy, the elephant in the room. But here's the big question. Can the world's power grid handle it? Data centers consume enormous amounts of electricity and water for cooling. Some analysts estimate that AI data centers could soon use 10% of global electricity output. That's why BlackRock isn't just investing in buildings. They are also tying in renewable energy projects. Their plan includes co-locating solar and wind farms near data centers to supply sustainable power. In other words, BlackRock isn't only building digital infrastructure. They're building the green energy backbone that keeps it running. And that's where ESG and profitability align, a rare combination in modern finance. Competition and the bigger picture. BlackRock isn't alone. Brookfield, KKR, and Digital Realty are all ramping up data center portfolios. But BlackRock's scale and access to institutional capital, from pension funds to sovereign wealth funds, give it an enormous advantage. They can build globally, faster, and with cheaper financing than almost anyone else. And that means, as AI scales, BlackRock could quietly become one of the biggest landlords in the digital world. While others chase headlines about AI stocks, BlackRock is buying the infrastructure that powers them. What this means for investors. So what does this mean for you as an investor? First, watch for BlackRock's infrastructure and real asset funds. Retail investors can gain indirect exposure through ETFs like iShares Global Infrastructure ETF, IGF, or real estate ETFs that hold digital REITs. Second, consider the ripple effect. As BlackRock and others build more data centers, demand for semiconductors, power equipment, and renewable energy will also rise. This is the hidden layer of the AI boom that most people aren't watching yet. BlackRock isn't chasing trends. They're engineering the future. While the world talks about AI models, BlackRock is buying the infrastructure of intelligence itself. And in this new era, the smartest money isn't in apps or algorithms. It's in the data centers powering them all. If you found this breakdown insightful, hit the like button, share it with a fellow investor, and subscribe for more deep dives into the financial forces shaping our world. This is Finance Unfolded, where we uncover the money moves behind the headlines.